you scrambling to file your taxes every single year? Or better yet, missing deadlines and paying penalties and being in complete chaos mode? Well, that is going to stop today. Why? Because my name is Carla Dennis, and in this video, I am going to break down for you tax deadlines that every LLC owner needs to know, and how you can avoid paying penalties and interest. But before we jump in, I'm gonna need you to like, comment, and subscribe so you are not missing out on any of this wealth building information. Now, let's get after it. When you own an LLC or you own a business, the tax deadlines become extremely important. And most people get this really confused. When you are an LLC owner and you are filing as a multi-member LLC, when you are an S Corp owner, your tax deadline is March 15th of every year. It is 30 days before the regular tax deadline. And a lot of you do not know that. So I want you to write that down. March 15th is your deadline date. If you are an individual tax filer, if you own a C corporation, or you are a single member LLC filer, your tax deadline is April 15th of every single year. So make sure that you are filing on time. And if you can't file on time, make certain you file an extension on or before March 15th and April 15th. And when you file those extensions, your extension deadline as a multi-member LLC, as an S corporation, is September 15th. Your extension deadline as an individual, as a single member LLC, or as a C Corp is October 15th. And I want to make sure that we don't forget our nonprofit businesses as well. If you own a nonprofit, your first deadline is May 15th and your subsequent deadline is November 15th if you file an extension. So make sure you lock those deadlines in to avoid getting yourself into a tax slinky. In addition to tax filing deadlines, you also have quarterly tax deadlines. If you owe over $1,000 on your tax return when you file, that means you should have been paying quarterly taxes. Your first quarterly tax extension is April 15th. I know that's when your tax return is due too as an individual. So you could be paying your balance of last year and making your current year estimated tax payment. April 15th is when your first quarterly payment is due. June 15th is the second quarterly payment, September 15th is the third, and January 15th is the final quarterly tax payment. You technically, my friends, should not be paying tax for your prior year return on April 15th. Allow me to give you an example. If you are filing your 2024 income tax return that is due April 15, 2025, you should not have a balance due on April 15, 2025. Why? Because your last quarterly payment would have been due and should have been paid by January 15th. 2025. It's so important, and I know that's really confusing, but I want you to start making your quarterly payments, even if you can't pay the whole amount. Even if you can just do a partial payment, it's better you do some payment than no payment, because we want to make sure you keep IRS off your back. When you don't make your estimated tax payments, when you don't file your income tax return on time, you know what happens? Aside from the fact that you go into a little special file cabinet in the IRS's office that says, audit these people because they never file on time cabinet, aside from that, you're gonna get hit with penalties and interest, extra money that you're just going to have to give to IRS. The failure to file penalty is 5% per month up to 25%. That is a huge penalty that you're gonna have to pay, 25%. So you wanna avoid that at all times. In addition to having a failure to file penalty, if you owe, you're gonna have a failure to pay penalty, which is 0.05% each month. And those penalties add up. Honestly, we worry about credit card debt. You need to worry about the debt you owe IRS, because that debt is a lot, not just the tax. Most people can pay the tax, but by the time you calculate the tax and you calculate the interest and you calculate the penalty, you have doubled the tax. If you owe $5,000, you could probably pay that off over time, but now you owe $10,000 because you have penalties and interest. You want to avoid penalties, you want to avoid interest by paying your taxes on time, by filing your taxes on time. Even if you may not have the most accurate tax return, go ahead and file that tax return on time. Why? Because the return went into the system on time. You can always go back and amend it, but you're going to avoid the failure to file penalty. Now, what about you owing tax? And you're thinking to yourself, Carla, oh, so I don't want to file my tax return. IRS is going to come after me. Let me tell you something. File that tax return anyway. Wait, I know, don't be messaging me. I already know what you're thinking. But Carla, when I do that, they're gonna know I owe them and they're gonna be knocking on my door. There are so many solutions if you owe IRS that you can avoid having to pay the penalties for failure to file, for failure to pay. File on time if you owe. File on time, even if your return is not going to be the most accurate. You can always amend, but do not get into the habit of not filing your tax return on time, because you cannot afford the penalties and interest, my friends. Many of you business owners will also have other compliance requirements, such as needing to file your sales tax returns. If you sell tangible goods, for example, a cup, a pen, anything of that nature, you may need to file your sales tax return. You should have registered with your state's revenue department that is responsible for collecting sales tax in your state, and it's different in every single state. So make sure that you look into that, because a lot of times sales tax auditors come years later to collect that tax, and that tax can be huge. In addition to sales tax, you may also have to file and pay payroll taxes. If you're on payroll, if you have employees and you're paying them via a paycheck every 2 weeks, once a month, once a week, you should be withholding payroll taxes, Social Security, Medicare, federal, and state. And when you do, you have to remit those payroll taxes according to how much your payroll is. It could be the next day after pay date. It could be a week after pay date, 2 weeks, or even a month. But make sure you get with the right tax advisor to tell you. In addition to that, you have to file your quarterly payroll tax returns, which are due 30 days after the end of the quarter. So Q1 is due in April, Q2 is due in July, Q3 is due in October, and Q4 is due in January, when you also should be issuing those W-2s. So as a business owner, my friends, you now know what your filing requirements are. You now know your deadline dates, March 15th and April 15th. You now know you have to make quarterly estimated payments. You now know that if your quarterly payments can't be made in the full amount, that you can pay a smaller amount. You now know why, because you want to avoid failure to file penalties. You want to avoid interest. You now know about sales tax. You now know about payroll tax. And it's important to know these things, because the sooner you learn your compliance and get it right, the sooner you can put your mind on growing your business, putting that profit in your pocket, investing for you and your family, and growing your wealth. So go get after it. And while you're doing so, make sure you like, comment, and subscribe so you don't miss out on any of this wealth building information. And I want to hear from you by you saying wealth in the comments. If you have already messed all of this up already and you're thinking to yourself, oh crap, I haven't done anything right, do not put your head in the sand. There's so many solutions for you, one of which you can file Form 911 asking Taxpayer Advocate for help, or you can reach out to me and I'm happy to get you straightened out. But at the end of the day, do not fear, because you need to make certain you get your business on track so you can keep your profit in your pocket.